Today, we are intentionally setting our sights away from the well-trodden paths of global finance.
Yeah, definitely off the beaten track a bit.
We're not looking at Wall Street, nor are we charting the venerable institutions of the City of London. Nope.
Uh-huh.
Instead, we are zooming in on Brisbane, Australia. Now, that's a city that, until very recently, you wouldn't necessarily associate with, well, generating billion-dollar scale global financial services firms.
And that strategic location, that non-traditional hub,
Yeah,
that's maybe one of the most fascinating parts of this whole story we're about to unpack.
it really is.
It's a key part of the formula, you could say.
Our source material profiles a relatively young, and I mean incredibly dynamic entrepreneur, Shin, known in the financial world mostly as Johnny Shin.
Johnny Shin, right.
He's a Korean-Australian financial expert who built the Solomons Group essentially from scratch, from the ground up.
Mm-hmm.
And he reached this massive scale by focusing intently on a very specific and, it seems, consistently underserved global market.
Yeah, and the growth numbers, they really do speak for themselves. I mean, in just a few short years after founding the firm.
Which was when? 2019?
2019, that's right. Solomon's Group blew past managing over 1 trillion Korean won assets under management.
Wow. Okay, let's translate that. For our Australian and international listeners, that's roughly AUD $1.2 billion. $1 billion with a B.
AUD $1.2 billion that they're managing and advising on. I mean, this is exponential scaling we're talking about in a highly, highly competitive sector.
So our mission today really is to kind of reverse engineer that formula. We need to unpack how Shin's unique background, his bicultural identity,
Which is critical.
and his highly calculated decision to operate out of Brisbane, of all places, and then the development of this innovative integrated business structure.
Yeah.
How did all that lead to this, well, explosive rapid growth?
Yeah.
This isn't just a biography, right? It feels more like a blueprint.
I think that's a good way to put it. This deep dive, it really asks us to pull together several complex themes. We'll explore the powerful convergence of, like, personal identity and really high-level professional expertise.
Okay.
Then there's the strategic exploitation of a global market niche, specifically the high-net-worth multicultural client. That's key.
Right. The underserved market.
Exactly. And then what does this all mean for, let's call it, modern diasporic capitalism? We're looking at a case study here where identity isn't just, an accident of birth.
Uh-huh.
It is demonstrably a competitive, scalable business strategy. His identity is the strategy in many ways.
Okay, let's unpack this journey then. Before the firm, before the billions, there was the foundation. And it seems like that foundation rests almost entirely on the lived experience of the founder himself.
It does.
So how did Shin personal history, specifically this bicultural journey, how did that become the core strategic mechanism, the engine of his business?
Well, it starts back in Seoul, where he was born. But the pivot point, the moment that really shapes his entire professional path, happened during middle school.
Okay.
Around 7th grade, he immigrates to Australia, specifically to Brisbane, with his mother. Now, that transition, moving countries at such a, formative age, it's inherently challenging.
Absolutely.
But it also forced the acquisition of what turned out to be his greatest competitive advantage.
Yeah.
This idea of bicultural fluency.
So he didn't just get an Australian education, which culminated in a Bachelor of Commerce in Finance from Griffith University, right?
That's Griffith Uni.
But he had to live and breathe two entirely different cultural and linguistic ecosystems at the same time. So how does that lived experience, that day-to-day reality, translate into high-level financial strategy? What exactly is bicultural fluency when we're talking capital markets?
Yeah, that's the key question. It's much more than just speaking Korean and English fluently. That's simple bilingualism.
Yeah.
Bicultural fluency, as our sources really analyze it, is the intuitive grasp of the subtle cultural nuances.
Nuances like what?
Nuances that govern things like trust, risk tolerance, how business relationships are valued and built. For instance, in many Asian cultures, particularly when you're dealing with high net worth families and generational wealth, trust is often built relationally. It precedes the transaction. It's fundamental.
Okay, relationship first.
Whereas the Australian, or let's say the broader Anglo-Saxon approach, tends to be more transaction-focused. It's more legally defined right from the outset. Get the contract sorted.
Which suggests a fundamental difference in client needs, right? A financial firm just relying on Western models, they might completely miss crucial relational cues or misunderstand cultural priorities, maybe around inheritance or asset preservation versus just chasing rapid growth.
Precisely. That's exactly it. Shin was equipped, really from an early age, to navigate both of these distinct mental models. He understood both worlds.
Hmm.
So when he decided to focus on connecting Korean capital with Australian markets, he wasn't just relying on, literal translation. He was tapping into this deep, intuitive cultural understanding.
He knew where the sensitive spots were.
He knew where the pressure points were, yes,
Mm.
where the unspoken anxieties might lie for these clients. And crucially, where traditional standardized Western financial solutions would inevitably, well, fall short for an overseas or multicultural client base.
Mm.
They just didn't fit quite right.
So that intuitive grasp, that fluency, allowed him to see the vacuum, the gap in the market that the big standardized institutions were just missing.
Totally missing it.
They saw a client demographic, maybe? He saw a unique cross-cultural challenge that needed bespoke, relationally sensitive solutions.
That's the strategic leap he made. He realized that these large, monolithic financial institutions, they're fundamentally built for scale and standardization. That's their strength, usually.
Right, efficiency through uniformity.
But their models are inherently inflexible because of that. And they consistently fail to meet the complex, unique, specific needs of multicultural and overseas clients operating within the Australian system, especially around things like cross-border asset structuring, tax compliance. It gets very messy.
So his identity is the strategy that fills that vacuum. It's the key that unlocks that specific market need.
You got it. Identity is strategy.
Okay, so he had the identity-based strategy, the vision. But to execute $1 billion vision, you need serious technical firepower, serious know-how.
Absolutely.
Yeah.
Technical credibility is paramount.
Which brings us to what we're calling the incubation phase.
Yeah.
The 10 years he spent inside the machine, working for some major global financial giant.
Yeah, that decade was absolutely critical. It wasn't just, climbing the corporate ladder. It felt more like a calculated strategic accumulation of assets, both intellectual and network assets, and technical mastery.
Where does he start?
He began at Macquarie Investment Bank, which, as you know, is globally renowned for its infrastructure and capital markets expertise, a real powerhouse. Then he moved on to J.P. Morgan's asset management group, specifically Ord Minnett.
Okay, Ord Minnett. And within J.P. Morgan, his specialization was working with high net worth individuals and family offices. How exactly did that specific experience translate into a concrete blueprint for his own firm? Can we get into the specifics of the technical skills he really mastered there?
We can definitely pinpoint 3 core, indispensable assets he acquired during this time. First, and maybe most obviously, the top-tier technical expertise.
Right, table stakes at that level.
Absolutely. Working with family offices means you have to master the most complex areas of finance. We're talking sophisticated capital market strategies, complex wealth preservation techniques, multi-jurisdictional asset operations, intricate estate planning.
The really tricky stuff.
The really tricky stuff. This exposure basically taught him the gold standard of financial service delivery, the how of global high finance at the highest level.
Okay, so that's the professional competence, the deep knowledge you absolutely need to earn trust when you're talking about that much wealth. What's the second asset he gained?
The second is the network, a robust, high-level network built on sustained professional trust over years. You don't just launch a firm aiming for the scale overnight without established relationships.
Makes sense.
And we see the direct result of this incubation period in the fact that he co-founded Solomon's Group with former colleagues, notably Jonathan Lee, who became a partner based in Hong Kong.
The Hong Kong connection. Crucial.
Absolutely crucial. These synergistic relationships, built over years working together at top firms, they basically became the intellectual and network capital of the new venture right from day one. It allowed them to scale immediately into the wider Asia-Pacific market, not just Australia.
Okay, so technical skills, network. The third asset then, which kind of ties everything together, must be the ultimate confirmation of that market gap he suspected existed.
Exactly right.
Working within these huge systems gave him undeniable proof, firsthand experience, that the standardized model was fundamentally broken for his target demographic.
Exactly. He wasn't just guessing at a niche from the outside. He was pinpointing the exact location of the underserved opportunity within the Australian and broader Asia-Pacific financial ecosystem. He witnessed firsthand the inefficiencies, the cultural blind spots,
The frustrations clients must have felt.
the frustrations, and sometimes the outright conflicts of interest inherent in the large, vertically integrated banks. So those 10 years were like an intensive period of reconnaissance, It provided both the skills and the conviction required to launch a disruptive alternative. He knew it could be done better.
It really sounds like his time in global finance wasn't just a job, it was a deliberate process. Acquiring the tools, the knowledge, the network necessary to eventually dismantle the status quo he was observing from the inside.
That's a perfect summary, I think. It was absolutely a calculated incubation period, a purposeful acquisition of the technical skills, the relationships, and critically, the market insight needed to launch a successful, highly specialized, and globally aware firm. He was building his toolkit.
Okay, so he's got the personal asset, this bicultural fluency. He's got the top-tier technical expertise from his incubation phase. And he's clearly identified this significant market gap.
The trifecta.
The next challenge, though, is immense. How do you build a structure in 2019, based in Brisbane, that can not only fill that gap, but actually guarantee the kind of loyalty you need from high net worth clients? They're notoriously discerning.
And rightly so.
This is where it gets really interesting, I think, particularly when you look at the founding philosophy.
Yeah, the philosophy sets the stage. The firm's name itself, Solomon's Group, is based on the values attributed to King Solomon: wisdom, justice, and wealth creation. That immediately signals a certain kind of long-term ethical approach.
More than just chasing returns.
Exactly. But the most decisive strategic choice, the one that seems designed to immediately secure trust from a demographic highly sensitive to hidden fees and conflicts of interest, was operating as a non-bank aligned independent firm.
Okay, we hear the term independent thrown around a lot in finance. Why is that specific phrasing non-bank aligned? Why is that such an exceptionally powerful trust builder for their target clientele, especially those involved in complex cross-border capital flows?
Well, to really understand the power of that phrase, you have to look at the recent regulatory history, particularly in Australia.
Ah, the Royal Commission.
Exactly. Following major financial scandals, most notably the Royal Commission into Misconduct in the banking, superannuation, and financial services industry, client trust in the big, vertically integrated banks, and especially their affiliated advisors, just plummeted. It was a crisis of confidence.
Yeah, the core conflict of interest was just laid bare for everyone to see, wasn't it? Bank-aligned advisors were often heavily incentivized, sometimes required, to push the bank's own proprietary products.
That's right. High-fee managed funds, internal insurance policies, regardless of whether they were genuinely the best choice for the client's specific situation.
The advice wasn't necessarily objective.
The goal, too often, became product distribution for the bank, not objective advice for the client. So, by positioning Solomon's Group as strictly non-bank aligned, Shin immediately signals something powerful to the client.
What's the signal?
The signal is, we have no proprietary products to sell you. Our only incentive is your success, your best interest. This structural separation allows them to genuinely operate under a true client-first fiduciary standard.
Meaning they can offer objective advice sourced from the entire global market, not just from one bank's limited inventory.
Precisely. And that is the decisive factor for many high-net-worth individuals in family offices, especially those who might have been burned by conflicts of interest at larger institutions in the past.
It's an immediate, powerful, competitive differentiator.
Yeah.
Independence, in this context, becomes the hardest asset to acquire in finance: genuine client trust.
And you can argue that this trust mechanism, built on that independence, is what enabled them to rapidly secure the kind of assets under management we talked about earlier. It unlocked the door.
Makes perfect sense.
But the structure of the firm itself is where you see the real operational genius, I think. It isn't just a single service offering. It's a synergistic, integrated platform, what the sources refer to as the 4 pillars.
Yeah, it feels less like a traditional financial firm and more like an interconnected ecosystem, something designed specifically for complex, often cross-border wealth management. Let's break down those 4 pillars and really explain the synergy between them.
Okay, so the first pillar is Solomon's Wealth Management. This is the core offering, you could say. Comprehensive financial planning, sophisticated investment strategies, private wealth management for individuals, families, high net worth clients, the foundation.
Got it. Pillar 1, wealth management.
Pillar 2 is Solomon's Capital. This is the boutique corporate advisory arm, handling complex stuff like mergers and acquisitions, M&A, capital raising for businesses, strategic advice for private companies, particularly across the Asia-Pacific region.
Okay, so wealth and capital. Then you integrate the necessary professional support services that typically, exist outside a traditional financial advisory firm. You'd usually have to go elsewhere.
Exactly. That's the integration piece. The third pillar is Solomon's Accountants. This division handles all the complex tax structuring, the compliance work, the accounting needed, especially when you're dealing with multi-jurisdictional assets. Very
So
important.
crucial, yeah. And the fourth?
And the final pillar, completing the circle, is Solomon's legal. This provides the precise legal strategy needed to support M&A activity, corporate structuring, asset transfers, complex family arrangements, trust deeds, wills, the works.
Okay. Wealth, capital, accountants, legal, all under one roof. This is where that concept you mentioned earlier, the flywheel effect, really comes into sharp focus. Can we use that analogy again? Maybe expand on the technical benefit for the listener.
Sure. Think about the traditional approach first. It's often a segmented, fragmented service model.
Right?
A wealthy family comes in for wealth management advice, pillar one. Their advisor eventually recommends maybe selling a family business, which requires corporate advice, pillar two. But then the client has to effectively exit the financial firm's direct service.
Right. They get referral.
They get referrals. They have to drive across town, metaphorically speaking, to coordinate with an external law firm, find an external tax accountant, maybe bring in an external M&A consultant. This creates friction. It introduces risk and, frankly, massive coordination inefficiency and cost.
Things fall through the cracks. Communication breaks down.
Absolutely. Solomon's Group essentially eliminates that friction
Yeah.
by offering all four services internally, seamlessly integrated. Now, this isn't just about client convenience, though that's part of it.
It's more than convenience.
It's a fiduciary goldmine, in a way, because it eliminates the massive risk and often hidden expense of coordinating fragmented external legal and tax counsel who may not be communicating effectively or efficiently or even have the full picture.
Everyone's on the same page, working from the same playbook internally.
Exactly. And that synergy, that integration, drives accelerated growth for the firm too. Imagine a typical client scenario. A Korean-Australian family office starts using Solomon's Wealth.
Okay.
They then decide, based on advice, to acquire a significant commercial property asset in Queensland. That immediately triggers the need for Solomon's capital for the transaction advice.
Right.
Now, this cross-border acquisition requires complex tax minimization strategies. That's where Solomon's accountant steps in. And the deal necessitates the creation of new trust deeds, maybe new corporate entities, to manage the asset globally. Solomon's legal is required for all that structuring.
So they maximize the revenue generated per customer because they capture the full value chain of that client's entire financial ecosystem. There's minimal leakage of fees to external partners.
Precisely. And maybe just as importantly, they create extremely high switching costs for the client.
The lock-in effect.
Yes. If a client has their corporate structure, their family trust, their tax planning, and their private wealth management all seamlessly integrated under the Solomon's roof, it becomes prohibitively difficult, expensive, and frankly risky to try and move any single piece of that complex relationship to a competitor.
You'd have to unravel the whole thing.
You'd have to unravel the whole tapestry. So they are locked in, but ideally, happily locked in, through the comprehensive efficiency and effectiveness of the integrated model.
It's a structure really built for client stickiness and clearly designed for rapid scaling, especially given the complexities of cross-border wealth they specialize in.
That's the engine design.
Okay, so that integrated model clearly provided the engine, the foundation for growth. Now let's look at the implementation, the actual strategic decisions that powered this incredible ascent. We're talking roughly 300 billion KRW, maybe USD $250 million, in early 2020.
Yeah, around there.
To surpassing 1 trillion KRW, AUD $1.2 billion by the end of 2022. That kind of rapid growth trajectory in just 3 years, it just can't be accidental.
No, absolutely not. Luck plays a role, but this feels very intentional.
It must be attributed to some major strategic choices. Let's start with location, because that one really stands out.
It really does. The decision to base the firm in Brisbane, deliberately choosing not to go to the traditional financial magnets of Sydney or Melbourne, I mean, that seems like potentially an enormous unnecessary risk on the surface.
Yeah.
Especially for a firm aiming to manage over 1 trillion KRW in assets.
Right. How did they overcome that potential geographical bias? High net worth clients, especially international ones, are traditionally drawn to the established financial prestige of a city like Sydney. Why was Brisbane actually a calculated, shrewd advantage?
It seems it was a decision based almost entirely on future forecasting and identifying a specific market opportunity. First, Brisbane simply offered higher organic growth potential as a city and critically significantly less incumbent competition in their specialist asset management field.
Easier to stand out.
Much easier to stand out and dominate the local niche far more rapidly than they ever could have in a saturated, hyper-competitive market like Sydney or Melbourne. They could become a big fish in a fast-growing pond.
Okay, less competition. But the real kicker, the source of maybe capital acceleration, has to be the 2032 Summer Olympics, right?
Precisely. That Olympic decision, announced later but anticipated, fundamentally transformed Brisbane's trajectory. It went from being just an ascending Australian city to being a guaranteed, decade-long investment magnet.
A huge
A
catalyst.
massive catalyst. Solomon's Group, by launching in 2019, positioned itself perfectly to capture the enormous capital influx related to infrastructure development, property, advanced manufacturing, tourism, everything the Olympics promise over the next decade plus.
So they were established and ready.
Established and ready to catch that huge wave of pre-Olympic investment, particularly from Asia.
So essentially, they located themselves right at the epicenter of Australia's future economic growth, where the need for sophisticated cross-border advisory, especially for Asia investors looking to capitalize on the Olympic buildup, was likely to be highest and growing fast.
It looks like a perfectly timed entry window in retrospect.
Yeah.
Calculated foresight. But location and structure alone, they aren't enough to guarantee success at this level.
True, execution matters.
Execution matters hugely. And the success is also clearly driven by the quality and, perhaps more uniquely, the composition of their professional staff. They grew to about 80 people, drawn from the top ranks of global investment banks, law firms, accounting houses.
Top talent.
Top talent. But it's how that talent is composed that's interesting. Our sources refer to this team structure as the financial UN. Let's get granular here. How does this intentional multiculturalism actually function as a core, scalable business development strategy? Not just, a matter of good HR policy or diversity targets, but it's purely operational in its strategic intent. The team includes professionals not just from Australia and Korea, but from Hong Kong, Japan, China, India, even places like Kenya, according to the source.
Wow, quite a mix.
A real mix. And each of those employees doesn't just bring their technical skills, the finance degree, the legal expertise. They bring deep, intrinsic network access and inherent trust within their specific cultural or linguistic community.
Can you give us a concrete example of how this multicultural structure actually creates a direct financial advantage? How does it win business?
Certainly. Let's say Solomon's Group wants to actively penetrate the Japanese or Hong Kong high net worth market more deeply. Instead of launching expensive, generic advertising campaigns built on, abstract trust signals, they can leverage the innate connections, the shared cultural understanding, and the credibility of their own Japanese or Hong Kong partners and staff. It's authentic outreach.
Doors open more easily.
Doors open more easily. Trust is established faster. Furthermore, they can navigate subtle regulatory hurdles or cultural nuances that might completely halt or significantly slow down a more monocultural firm.
Like what?
Well, for instance, a professional on the team from Kenya might have a very specific understanding of how to structure capital flow for a family office interested in, say, specific African mining or resource assets. They might know about tax treaties, local investment structures, or even just the right people to talk to in a way that someone without that deep, on-the-ground cultural linguistic link simply wouldn't.
So it's not just language, it's deep contextual knowledge.
Deep contextual knowledge. This allows them to authentically and effectively serve a much broader international client base simultaneously. They're not just guessing about these markets. They have the expertise in-house.
It effectively scales their core multicultural strategy by embedding the network, the cultural fluency, right within the firm's DNA. It's not just the founder anymore.
Exactly. The capability becomes institutionalized through the team.
Now, let's pivot slightly to the leadership philosophy driving all this. Shin core management principle is apparently defined by a specific quote.
Yes, a quote from William Pollard. The arrogance of success is to think that what you did yesterday will be sufficient for tomorrow.
That's powerful. How does that philosophy manifest?
Well, that quote seems to provide the intellectual framework, the justification almost, for every single disruptive strategy we've discussed so far. It fundamentally challenges complacency. It helps explain why he took the huge entrepreneurial leap from the safety and prestige of J.P. Morgan. Because presumably, even that prestigious, stable job yesterday wasn't seen as sufficient for the opportunities he envisioned for tomorrow.
It also explains why they rejected the traditional finance model, right? The siloed, often conflicted finance structures of yesterday weren't sufficient for the client needs of tomorrow.
Precisely. And the purely domestic, maybe Sydney-centric, market focus of yesterday wasn't sufficient for the globalized capital flows of tomorrow. This philosophy seems to mandate a relentless, non-complacent drive. It forces continuous innovation in structure, in service, in market focus. Never stand still.
And that innovation, that approach, it was validated externally, wasn't it?
It was. In 2022, he wasn't just recognized within, say, the Korean-Australian community. He was officially named the Multicultural Young Entrepreneur of the Year by the city of Brisbane itself.
That's significant.
Very significant. That recognition really cemented his firm's status as a critical, mainstream driver of Brisbane's future economic growth. It moved the perception beyond just being a niche player serving one community to being recognized as a key part of the city's broader economic fabric.
And aligning with that philosophy, he also emphasizes a core service tenet, that investment is about more than money, focusing on client well-being, long-term relationships.
Which circles right back to that independent trust-building foundation we analyzed earlier in segment 2. It all seems quite consistent. The structure supports the philosophy. The philosophy drives the strategy.
Okay, so this case study, while focused on one firm and one individual, it clearly transcends just Australia and Korea, doesn't it?
Yeah.
It feels like it tells us something fundamental about the future of global economics and maybe the evolving role of high-skilled diasporic communities within it.
I think it absolutely does. It points to a larger trend.
Let's try and connect this to that bigger picture now. Shin is apparently quite vocal about seeing his role and his firm's role as being a bridge builder.
Yes, his vision is explicitly defined in those terms, bridging the Korean and Oceania markets. And crucially, this isn't just, theoretical talk or marketing spin.
It's operationalized.
It seems to be operationalized through strategic engagement. For example, he plays a key role in the World Federation of Overseas Korean Traders Association, known as World OKPA. He serves as a continental representative for their Next Generation Committee. That's a significant position within the global Korean business network.
Okay, so he's active in the community structure. But what specific actions does he take within that bridge building framework? How does he actively facilitate the exchange beyond just his own firm's core wealth management business? Is he doing more?
It appears so. The sources indicate he focuses heavily on actively incubating promising Korean SMEs, small and medium enterprises, helping them enter the Oceania market.
Incubating. What does that involve?
Well, this seems to be a massive value-add service. He provides, through his network and firm presumably, essential, sophisticated services that a typical SME, especially from overseas, would normally struggle to afford or even access easily. Things like detailed local market research, assistance with securing funding, and critically navigating the complex local legal and accounting intricacies needed for successful incorporation and operation in Australia.
Wow. So he's not just managing existing capital, he's actively trying to build the pipeline for future generations of Korean business to flow into Australia and Oceania.
That seems to be the goal. Building the bridge, then helping traffic cross it successfully. And this activity brings us to a really fascinating and, I think, crucial conceptual leap that he articulates himself. The differentiation between what he calls Diaspora 1.0 and Diaspora 2.0.
Okay, Diaspora 1.0 versus 2.0. Explain that.
This provides a vital lens, I think, for understanding shifts in modern globalized economics, particularly for diaspora communities. He views the first generation of overseas economic leaders, let's call them Diaspora 1.0, maybe the post-war generation, as contributing to their homeland primarily through the physical export of goods. Think of the classic trading companies that were established, moving physical products around the world after World War II and the Korean War. The focus was heavily on physical trade, logistics, manufacturing.
Tangible goods moving across borders.
Exactly, tangible goods. But the new generation, his generation, Diaspora 2.0, they expand the economic territory in a different way. They promote the exchange of sophisticated, intangible assets.
Intangible assets
like financial services, high-level corporate structuring advice, technology transfer, intellectual property, and critically, the efficient flow of capital itself across borders. They're essentially trading structure, knowledge, and sophisticated fiduciary services.
Which are inherently higher value-add activities, perhaps, and less constrained by physical borders or trade tariffs.
Precisely. Much higher value add, much more scalable globally. So Solomon's Group, in this framework, becomes an embodiment of this modern diaspora capitalism. It symbolizes the evolution of overseas economic power, moving from simple trade of goods to complex financial intermediation and knowledge transfer.
So the broader takeaway then, for you, the listener perhaps, is that this model really shows how one of the most valuable commodities in global finance today is increasingly becoming identity, cultural connectivity, that bicultural fluency?
Yeah, it's shifting. It's perhaps becoming less location dependent in the traditional sense. You don't have to be physically on Wall Street or in London anymore, but it's becoming highly identity dependent. Your
Yeah.
background, your fluency is the asset.
Now, we have to balance this picture, this extraordinary opportunity, this success story. It inevitably comes with challenges, especially when you factor in rapid scaling and global ambition. What does the future trajectory look like for Solomons, and what are the major hurdles they absolutely must clear to sustain this?
Yeah, a balanced view is essential. The opportunities are pretty clear. Continued robust capital flow between Asia and Australia, likely sustained demand for their specialized multicultural financial services, and of course, the massive investments still to come, spurred by the 2032 Brisbane Olympics. That's a decade-long
It's a
tailwind.
huge tailwind, but the challenges.
The challenges are formidable. Let's tick through maybe three big ones.
Okay.
The first, and maybe most immediate as they look outwards, is intense competition, especially as they execute their stated plans for expansion into Asia.
Right. Competing on new turf.
Exactly. Expanding seriously into financial centers like Hong Kong and Singapore means they are leaving the relatively fertile, less hyper-competitive ground of Brisbane and entering markets absolutely dominated by global financial behemoths. Think UBS, Credit Suisse successors, HSBC, plus incredibly powerful local Asian institutions.
It's a different league.
It's a completely different league. They'll be competing on a new level of scale, which will require massive investment in brand recognition, operational capacity, and talent acquisition in those hubs. It's a big step up.
Okay, competition. What's the second major challenge?
Regulatory complexity. This scales exponentially, almost frighteningly, once you start operating seriously across multiple international borders.
The red tape.
It's more than just red tape. It's the silent killer of many ambitious international financial firms, managing operations across multiple, very distinct jurisdictions. Australia, Korea, Hong Kong, Singapore, potentially others, requires navigating differing, incredibly complex, and constantly changing financial regulations.
Different rules everywhere.
Totally different rules. For example, things like fiduciary duties, anti-money laundering, AML and or Know Your Customer, KYC laws, securities regulations, tax reporting. They vary wildly between those jurisdictions. This creates a massive compliance and legal burden. It requires dedicated, expert, and very expensive infrastructure that can really strain the resources of a rapidly scaling firm. One mistake can be catastrophic.
A huge operational drag and risk factor. Okay, competition, regulation. What's the third big challenge?
The third is a challenge that affects almost every successful founder-led firm, especially those driven by a unique vision and personality. Key person risk.
Meaning reliance on the founders.
Exactly. The current success of Solomon's Group is, by all accounts, heavily reliant on the vision, the bicultural fluency, the drive, and the deep personal network of the founders, particularly Shin and Jonathan Lee.
Makes sense.
As they continue to scale the business rapidly, the critical challenge becomes institutionalizing that expertise, that magic. They have to transition from being primarily a personality-driven firm to becoming a more system-driven firm.
How do you even do that?
Well, it means consciously codifying their unique client relationship knowledge, building robust middle management layers that can replicate the founder's approach, ensuring that their core competency, that cultural fluency and integrated service model, is deeply embedded in training programs, operational processes, technology platforms, and eventually in succession planning.
So the secret sauce isn't just in the founders' heads anymore.
Precisely. If they fail to truly institutionalize their core competency, future growth could become severely bottlenecked by the founder's limited time and capacity alone. It just doesn't scale indefinitely otherwise.
It's like the difference between building a single amazing custom Ferrari that only the original engineer knows how to truly drive and fix,
Right.
and building the Ferrari factory that can produce hundreds of them reliably and train others to maintain them. They need to build the factory now.
That's a great analogy. They need to build the factory for their unique model.
Yeah.
Hashtag tag OTRO.
Well, this has been a truly fascinating deep dive, I have to say. We've really mapped out the core components of what looks like a genuinely disruptive financial success story.
It's quite remarkable.
You have this dual identity forged in youth through immigration. Then 10 years of rigorous technical training inside global institutions. Add to that a very strategic, maybe even contrarian choice of a high-growth city like Brisbane. And finally, this innovative, integrated four-pillar structure designed for trust and efficiency, all combining to power Solomon's Group's rapid ascent to managing over AUD $1.2 billion in assets under management.
And I think what this story really demonstrates, perhaps the key takeaway, is that In modern global finance, the most valuable commodity isn't always the latest algorithm or the hottest stock pick or some proprietary product.
What is it then?
Increasingly, it is trust. And that trust, particularly when you're navigating the complexities of cross-border wealth and multicultural families, seems most effectively delivered through genuine cultural fluency and that hard-won badge of objective, non-bank-aligned independence.
Absolutely. The success here of Shin and Solomon's group, it really demonstrates that a unique bicultural identity, something often seen maybe just as personal history, can actually be monetized. It can be leveraged into an incredibly powerful and scalable competitive edge in the right market.
Identity is the differentiator.
So we leave you, the listener, with this final provocative thought to perhaps mull over. We've established that these Diaspora 2.0 leaders, leveraging their unique cultural identity and fluency, are building new kinds of economic bridges, specifically for intangible assets like capital and services.
Uh-huh.
As our global economy becomes profoundly more interconnected, more complex, how many other untapped Diaspora 2.0 market niches are still out there just waiting for the next generation of bicultural leaders to identify them and build the bridges needed to serve them? What specialized cross-cultural economic bridges could you potentially build?
That's a great question to ponder. Something to think about until our next deep dive.
Indeed. See you next time on The Deep Dive.